This is Ryan Dr. your Global Director of Development here with Auvoria Prime. And it is my distinct pleasure to not only welcome all of you, but to also welcome back, to welcome and to congratulate my good friend, Stephen Vetterl. So why am I saying that? Why am I saying welcome back, welcome, and congratulate? Well, Stephen was with us as a special guest last week. This week, Stephen is with us as the newly appointed official Chief Market Analyst of Auvoria Prime. I know if the chat was enabled, there would be a bunch of 777s going on right now. I know that excites many of you as much as it does excite me. It's probably even a little extra fulfilling and rewarding for me to get to see a good friend of mine now here on board with us with Auvoria Prime. And so, Stephen, congratulations, my friend. It's exciting that this was able to come together the way it has. And for those of you that are not familiar with Stephen, there's a brief summary of some of his credentials on the screen. He's a registered investment advisor. He holds both a Series 65 and 66 license. He is the 2017 recipient of the coveted Investopedia Top 100 Most Influential Financial Advisors. And then we have a little typo there. 2020, he's actually a nominee. He's a nominee for 2020. And I think if this community has anything to do with it, we'll make sure he's a recipient once again. And so here's what we're going to do over the next hour, just so everybody has accurate expectations. We're going to take the next 60 minutes and we're going to basically combine what would normally be 3 separate webinars into one, right? So we're going to do a recap of the previous trading week, and that going forward will normally be done in a standalone webinar of its own. But we want to be able to give you guys the benefit of kind of what it looks like to have some perspective from Stephen on how the market performed last week, what that meant to the trading. And we know from looking in the different results groups that it meant that a lot of you did very, very well. I think many of you followed some of the guidance and recommendations that Stephen gave last week, because a whole bunch of you hit your weekly goal this past week, which is always exciting. And I think we all owe Stephen a big thank you for some of the insights that he shared with us last week. So we're going to talk about the prior week. Then we're going to have Stephen give us a little bit of forecast on the upcoming week, okay, and then how we can utilize some of those insights into the week ahead in the markets. And then thirdly, we will kind of probably dive into the one thing that everybody is anxiously awaiting for, and that's talking about the new features in both Alexander and Einstein. We will take a little bit of a dive into how to use the new weekly trailing goal feature set. And so that'll be the third key item that we cover. And so I'm going to go ahead and take down my screen share now. And that should enable you, Stephen, to go ahead and bring up your screen. I know you want to lead off with the disclaimer, and I'm going to hand the mic over to you, my friend.
Well, thank you, Ryan, and good afternoon, everyone. Today is the 4th of April, 2020, and again, my name is Stephen Vetterl, Chief Market Analyst. Sounds kind of formal. Choose to have sort of pack them all in on this particular day, since we're getting a new format started for how I'm going to present weekly. But again, welcome everyone. If you're new to Auvoria Prime, we're happy to have you on the team. I'm going to try and act as your liaison to the software and the markets and what's coming up, forecasting, all that fun stuff. But as you can see, the risk disclosure here, the trading in foreign exchange market carries high risk and may not be suitable for all investors. So trading on margin and utilizing leverage can carry an even higher level of risk and lead to a complete loss of investment funds. I know that always sounds terrible, but we have to make the attorneys happy, right? So on the next slide, since this is we're getting the structure put together in a format for how I'm going to present, I thought that it was good to just pack everything in. But as far as our inaugural webinar, I kind of view myself as the chief market analyst, as your risk manager, essentially helping traders reduce risk. So some of the expectations I've set for this role, and these will continue to evolve, will be to essentially be your internal software analysis geek. I'm going to try and do a deep dive on the settings and how the software operates. We were fortunate last week with Sal, thank you, to have an introduction to the developers of the software. We went through a couple of things. We're going to continue that discussion so that I can gain some tremendous insight into how the software actually operates from a macro level. But the whole bottom line is that we want to really do a deep dive into understanding how the settings and the new changes coming to the settings this week, which Ryan will talk about in a minute, affect the performance of the software, because really that at the very core is what I'm looking to do for you guys. You know, it's great to do the weekly recaps on Wednesday night, and I'm looking forward to the forecasts on Saturday. You know, if we have some time, we could do a basic analysis of the main currencies that Alexander and Einstein as they trade. And if time allows, we can go through a few charts towards the very end each week was my goal, to maybe sort of introduce everybody into just basic understanding of charting. One of the great things about this role is that since the software is fantastic and it is in a semi and fully automated capacity, depending on which one you're using, all of the types of training that I've done in the past for discretionary traders, we don't need to do. So it essentially cuts the learning curve way out. And the beauty with the discussions with some of the developers is that on both a 4-hour time frame and most importantly a daily time frame, the software has been exceptionally effective in this. So that's kind of my goal. I don't know how we're going to facilitate this, but my final expectation essentially is to solicit feedback from the community on how to improve the training. What are you guys looking to see? I mean, if you want to take some notes on it, you know, if you want to send me an email, you're welcome to put the information into the chat. That way, as we begin to, you know, structure a format for these weekly presentations, we can go through and just have a systematic, quick bullet points going through everything that everybody's looking to see. So that's part of my goal as well. And just looking through the sheets, we may do some polls inside of Zoom in order to do that, and so forth. But it was great to see that with last week, there was a ton of people that hit their weekly goal. I mean, that's fantastic. I mean, as long as the weekly goal is somewhere between 1 to 3%, in my opinion, with the software settings, as we mentioned last week, as a 0.01 or a 0.02, I think you're in good shape. We're going to let Ryan talk a little bit about the newest feature, which is absolutely the best piece, in my opinion, to come down since we've been looking at this software trade over the last year. And there's some really exciting stuff coming down the pike just in the discussions I've had with the developers. But I'll go through last week with just sort of a recap. I'm going to switch over to another screen here. So let's switch over. So this is the Forex Factory. Many of you have seen this before. This is where it shows all the news stories. Remember, you always want to keep an eye on the most important thing is that you have the dates upcoming. You can scroll back and forth, but essentially looking forward to the next week, which essentially is April 5th, all the way through Friday, April 10th. In most cases, the software is only on for most as far as the generic settings between Sunday and Wednesday, which is what we're currently recommending. But do note that Business Outlook survey, some stuff coming out of the Aussie Monetary Bank in terms of rates. On Tuesday, nothing really that important. This is going to be a pretty big event, in my opinion. Almost to the point where I'm not necessarily going to suggest turning it off Wednesday, but these OPEC meetings have turned into a really big deal.
Hey, Steven, your mic's getting a little faint again.
Yeah, and also I have a whole bunch of new production software and equipment coming, so bear with me as we get switched over to the better stuff. Does that sound better, Ryan?
That's a lot better. Yep.
Okay, so I basically be yelling at my old mic. So again, Wednesday, the OPEC meetings that are going on, along with President Trump meeting with a lot of the oil executives, This isn't necessarily been a leader in the marketplace, but it absolutely has been affecting some of the changes in currencies. So as you see here on the next screen, hopefully that's showing up correctly. Let me just double check that we're sharing screen 3. Good.
Yep.
All right. So this, for anybody that does not know what this is, this may be new. This is finviz.com. And you can click on Forex. I love this because it's a single dashboard of a daily chart of all of the 9 majors that trade. Now, essentially, we only trade the 3 big ones, Euro, US dollar, which is up here in the left, US dollar, JPY, and then the Euro, JPY as well. This is the Canadian dollar, New Zealand euro versus the GBP, which is the British pound. That's called the cable, and then British pound. So with the 3 main ones, you can see that, again, dollar strength has been at the forefront. I mean, let's face it, as we unfortunately go through this global pandemic, everybody's really looking to the Federal Reserve for a lot of their monetary policy that's been taken in place. And the Fed has released, as many have heard, tremendous amounts of liquidity in both the equity and credit markets as far as repurchase of securities in order to keep markets, especially the credit markets, funneling and exercising trade and facilitating liquidity into the markets. This has been a real problem over the last few weeks, and that's why it's been much more difficult for, in my opinion, this algo to effectively trade through a lot of this, because it's just been illiquid in a lot of areas. And I don't want to dive too deep into this because I want to turn over the call to Ryan to go through some of the settings on the software. But I think, at least from just a general macro standpoint, it'll serve us all exceptionally well in our sort of introduction and or advanced training into Forex, to kind of understand where the markets are, 3 main currencies, and what kind of correlations that they have. Essentially, how are they trading? Are they trading similar? Are they trading uncorrelated in terms of the movements? But you can see some pretty wild stuff's taking place, especially looking at the Euro US dollar here. I mean, this has just been some crazy swings so far. And we took a look at an hourly chart on this currency. You can see that we've been trending down, little channels formed here. I don't want to get too deep into the charts again, but this is one of the main pairs that I trade on in both the futures capacity and Forex. The 6E is the piece that trades on this. So that's just a heads up. But as far as the calendar, not a lot of really big stuff. You know, we've gotten past essentially the last week's calendar with the jobless claims. I mean, everybody knows that global unemployment numbers are going to skyrocket, and that unemployment claims have been skyrocketing. I think to a certain degree that's been priced into most of the markets, including the currency markets, you know, and that's where some of these wild swings come from. So it's, you know, bear with us. It's a treacherous environment out there. That's why we are really putting effort in at Auvoria Prime here to make sure that these settings are in a conservative nature. And I can't stress enough to everybody out there, please do not be a hero, because this is how accounts get blown out. And I've seen it time and time again over the last couple of decades. When everybody starts playing around with crazy settings, it's just not good for the consistency, because ideally any type of trading system, the most important thing is its win rate and its consistency in generating profits. And as soon as you start tinkering around with that, it becomes risky. So we're trying to keep this to 45 minutes to 60 minutes. So Ryan, what I'm going to do is I'm going to release the screen to you. I always forget that. And why don't you go ahead and talk, if you would, please, about the most exciting thing coming down, and that's the change in the trailing settings.
Let me ask you a couple of questions before we dive into that, sure, Steve. So it sounds like your expectation, if I'm hearing you correctly, is that the significant economic effects that the coronavirus is having on a global basis, and then the efforts of monetary fund managers, et cetera, to try to continue to kind of operate on the fly, should we continue to kind of expect higher levels of volatility than normal?
Oh gosh, yes, absolutely. Apologize if I didn't bring that up, but I mean, just look at the chart of the dollar yen here. I mean, this is nuts. So I mean, these are some crazy moves, even on a daily chart. It's just a really real outlier type of movement, and many of these, actually, a lot of financial instruments that trade out there were way outside of what's called standard deviation movements. Just think of it as a rubber band that gets stretched, and we pulled heavy on almost a 3 standard deviation on the US dollar euro and on the euro US dollar last week, meaning that we moved to such crazy stretched out levels that a snapback was due, and it was pretty vicious, as you can see.
Yeah, there's no doubt. That's a pretty prominent spike down and then spike back up. And now, in particular, is a spike like that with a currency pair like the USD JPY even more significant? I mean, like, for example, is the USD JPY generally considered one of the more stable currency pairs? And so when you see these whipsaw type of moves in the market, is that an even further indicator of like dramatic levels of volatility?
I mean, whenever you hear me say 3 standard deviation, that is about as far as a rubber band can stretch without snapping. So absolutely.
So this won't have as much to do necessarily with the new features on the software, but let's just talk about in general. So Stephen, you're familiar with obviously kind of the inputs, and maybe we will share the screen. Actually, let's go ahead and have you discontinue your screen share, and then I'll jump into mine. Okay. And we'll actually pull up the settings panel. Okay, excellent. All right.
I see some of the questions piling in, guys. Thanks for the feedback. We'll get to the questions here towards the end.
Yep. Okay. All right. Give me 1 second. And I'm going to go ahead and get my screen shared up. All right. Stephen, can you see my screen?
Yes.
Okay. So before we dive into the updated settings, which we will talk about a little bit, just because we were on the topic of, again, market conditions, volatility, and when we look at the basic features in the inputs, for example, starting lot size, do you have any points of reference that you think would be valuable to share with people when we're talking about making appropriate adjustments to accommodate for a more volatile market?
I mean, it all boils down to that starting lot size, right? You have it on 0.03. I personally, if I was new to this game, as great as this software is, I still would probably want it around a 0.01.
Okay, so, yeah, you can see over here on the right, my balance is a $3,500 balance. Right. Of course, this is just a demo account, which I'll let you weigh in on this, but I think that it probably can't be emphasized strongly enough until people have a real feel for what their software is doing. Are you a big fan of demo accounts?
I've always, we called them sim, but demo, whatever you want to call it. This is basically some form of simulated trading. I always love the idea when you first start out, just like I did when we all first got together in October. I ran a demo for 4 months, and I wanted to see a large sample size of trades, and I wanted to see what the win rate was. Or you're always going to hear me talking about win rate, because that's really the bottom line. And if the win rate is really high, which is really rare, even in some of the most sophisticated high-frequency trading systems, many of their win rates, you could be exceptionally profitable with a win rate in the mid-50s, right? I've seen some of the trading systems that have win rates in the mid-60s. Some of the richest billionaires in the world, like Renaissance Capital, Jim Simons, you'll often hear me talk about. They have win rates in the high 60s, and they have phenomenal returns inside the fund. So right now, me personally, if I was somebody who was new with all the risk going on in the market, I'd probably have a starting lot size around 0.01.
Okay.
Unless if I was the type of individual and I had significant capital to trade, right? It wasn't the a small amount of money I had to start with. You could go to a higher lot size of 0.02, but as you'll hear a common theme coming from me, probably to the point of annoyance, it's all about risk management in this game. So most of the game's been taken care of for us by the software choosing the trades, right? So it's really up to us, and really the only role and the most important role we all share is setting risk parameters tight, especially during volatility.
I love that. I think, the long game mindset is really the way to get the most out of a platform like this, right? Like, I mean, if a client came to you in a traditional sense, forget about the software for a minute, and they asked you to double their money in 3 months, I mean, that just is not even something that people do, right? And so talk a little bit about that for just a minute, and then we'll get into the settings. Like, why, maybe I shouldn't ask why, but just talk about from your perspective how just because we have an amazing piece of software doesn't mean we should have outlandish expectations when someone would never walk into your office and hire you as a registered investment advisor and drop some outlandish expectations on your desk of how to grow their money. But yet there's a tendency sometimes when people get their hands on this cutting edge technology to have an expectation that the software is going to somehow do something that's almost like a mathematical impossibility in terms of how fast it can grow their money. Do you have any thoughts or comments on that idea?
Yeah, and by the way, I do see the comments, guys. I'll have to blame my son. He actually broke my gaming headset, so I got this old-fashioned microphone I'm using right now. So just bear with me till the new one. But unfortunately, getting audio video equipment shipped to you takes time because the shipping's like way faster.
That's a lot better. Whatever you're doing, don't stop for the rest of the webinar.
I basically have the thing halfway in my lips.
Perfect. Keep it there.
In any case, but you guys are funny. Good comments coming through, by the way. You guys are all a bunch of hams. I love it. But I always use a lot of F1 analogies. Both Ryan and I are huge F1 fans, as probably a lot of people are on this. But I always use a lot of racetrack analogies. Essentially, we have the supercar that's been built by Team Ferrari or Mercedes, whatever your favorite race team is, Team Renault. It's put on the track. We have the ability to win the race, but unless we operate it, efficiently and in an expeditious manner around the track, we're going to crash and burn. It's the same way with this software. We've got the ability to do all this, but it's important that we focus on the risk management techniques. And that's one of the biggest reasons, guys, that I actually took this position. I mean, I have tremendous respect for Tyler, for Ryan, for Sal, Bill, all the team at Auvoria. They're all great individuals. They're total pros. But at the bottom of the day, I'm a geek and I'm a trader, and I want the software to work, and I want it to be effective in terms of its win rate. So with it sort of doing all the work, in most cases, depending on the version you're using, all the thing I have to do is to study the outcome, right, and tweak the settings. And you're probably going to see some settings of a variety of natures. We're going to have settings for folks that have a lot of money, that can afford some risk in this. We're going to have settings for folks that have very little. But to be honest with you guys, I really would try to put at least a few $100s of live money in your Forex account if you can afford it. And if you can afford more, that's great. But the software probably cannot operate, as I'm seeing some of these questions come down, it probably cannot operate on a $50 account. You're probably going to need to put more money in there than that.
Yeah. Just so everybody's clear, so the out-of-the-box default profile directly from the software creators is a .01 lot size, just like Stephen talked about, and that's in reference to a $3,000 starting balance. And so, you have to kind of reach your own deductions as individual customers when you start deviating from that, right? That's a decision that each individual customer is going to make on their own. But understand, the out of the box, once you first install it, default profile on the software is a .01 lot size, and that's for a $3,000 account. Okay. Now that'll lead us to one of the questions that's popping up in here, Stephen, and this will get us into really starting to talk settings now. So I've had a few people I've seen put in the chat, and they're new to this, they're new to Forex, and they just want to understand, what does starting lot size even mean?
So lot size is just trade size. It doesn't have to be any more complex than that. But when you have a trade, you have what's called a size. So I'll give you an example. Let's say you want to buy one share of Apple, right? Apple's certainly taken a beating, but the stock's done exceptionally well over the last decade. And you want to buy a share for $250 a share. It's the same thing in Forex. It's called a lot size. So it's just a smaller size. At least that's the way that I view it. It's like buying a particular, but, just out of curiosity, Ryan, you got a lot of experience in this. How do you view lot size other than just, defining it? What's your view on lot size?
Well, so it would stand to reason, if we're talking risk management, which I know is the nearest and dearest theme in your heart, to preserve traders' ability to stay in the game long enough to see a meaningful outcome, right? Smaller is more conservative and bigger is more risky. And it's that simple, right? And so for me, Stephen, if the default settings when we first load the software that come directly from the creators is a .01 for a $3,000 account, I would say I'm guessing two things. If someone's not sure, they probably shouldn't deviate. And if someone's not sure about lot size, they should probably be running a demo account until they understand exactly how adjusting any of these settings is going to affect the trading in a simulated or demo account. And that way people are not, I hate to use this word, and I'm going to hand it back to you to talk more about this, but we don't want anybody to have a gambling mindset as it relates to using the software. And so, I think for any one person to understand how the settings will impact the trading performance, that's the beauty of a demo account. Would you agree?
Yeah, absolutely. Because the proof's in the pudding. The proof's in the data that comes out when you see these trades execute. So, lot size matters. Finding the best lot size with the settings that we're using, with a desired output, can help you determine the best lot size based on your current trading account size. So whether you're making it in some form of sim or a demo account or trading live, it'll help you understand what you would like to take as far as risk. But I still recommend starting off smaller, unless somebody out there, and there probably is a whole bunch of you, you've got millions of dollars, hundreds of thousands of dollars, you can trade with a larger lot size, 0.02. Personally, I trade 0.03, but that's because I understand, and I'm okay with the wide the wide risk parameters, and it brings with it the chance, especially last week, for some significant drawdown. It's sort of the ugly word in trading, right? But I'm going to bring a lot of this to the forefront in discussion. Yeah, it's kind of a scary thing. But if you're willing to grant the software a wider latitude of its ability to trade, you also have a better chance for profits. But I'm going to finish that with the caveat that, pigs get fat, but hogs get slaughtered, right? So, be smart about how you're going to do it. And there's absolutely nothing wrong with, because I know I can almost promise you some of my trader friends on this call, like, come on, this is too conservative, Steve. No, it's not. Start off with a demo account, 0.01, and see how it does, right? and you're going to know, profit or loss. I'm going to try and get a win rate calculation brought into some of these statistics, by the way, down the road, so we can see what the win rate looks like. And, we attach this and get it a lot more data built into some of these MyFX book account links. So we'll be able to see how it's live trading, real money, and demo. But that's something we're working on to bring down the pike to show you guys, because then we'll be able to go in and look at direct stats of how the software is executing. I mean, maybe digging into the weeds a little bit too much, but it's going to help us all understand this software and how it functions a lot better.
So now let's go through some of this new group of settings together, Steve, and just kind of we're going to give an overview together, and then we'll wrap up this part of it and we'll start digging into some of the questions, because I got the chat enabled, as you've seen, and there's a lot of fun spirited dialogue in there. Guys, if you have specific questions, put those in the Q&A, not the chat. What we will do after we go through these settings is we'll actually focus on the Q&A section of your Zoom inputs, not the chat, but the Q&A. So if you have a question you actually want answered, make sure it goes into the Q&A. And let's go through this group of settings together. So the first new setting we have is trailing equity. And the alternative to trailing equity is that, oh, come on. Let me, all right.
While you're working on that, Ryan, this is actually a good question. Can the software run a 0.005 lot size?
So I think that's more of a broker derivative than it is a software derivative. Most brokers don't offer a trade size smaller than a 0.01 in my experience, but that is a determinant of the broker. I don't even know if we can put it in. We can try, but even if we put it in, if the broker won't execute, it doesn't matter if we can put it in here. Let me try it. To be honest, I've never even tried it because I know that most brokers don't even offer it. So yeah, so see, you can input it, but that doesn't mean it's going to execute. So guys, make sure you're crystal clear on that is a broker determining factor at whatever Forex broker you're working with. That is not a determining factor of the software. Just because you can put something into the software doesn't mean your broker will allow trade execution based on the software input. Hopefully everybody understands that the broker is really the one who determines your trades going into the market, not necessarily the software. Software sending trade instructions to the broker, and then if those instructions are inside of the broker's allowable parameters, you'll get trade execution. If they're not, you won't. You have anything you want to add to that, Steve?
I mean, my experience, most brokers I've dealt with, whether it be some of the larger guys onshore here in the U.S., like Interactive Brokers, or a bunch of offshores, a lot of us deal with LQDFX. They're actually an excellent outfit that's got a fair amount of regulation going on in the Marshall Islands. But they will not allow anything under the 0.01.
Right. All right, so this first new feature gives us the ability to toggle between two basically profit management outcomes or goals, if you will, right? So the first one is what many of our existing users would already be familiar with. That's a fixed weekly goal. And like Steve said, and like many of you are probably used to, where the software comes out of the box in its previous version for Alexander and Einstein is a 3% fixed weekly goal. What happens here, if you're operating with a fixed weekly goal and that goal's hit, you're done. The software will take you out of the market, and as you can see on the chart right down here, weekly goal reached is what happens. And so now you've exited the market once it achieves the weekly goal. So here's why we have this new feature set, and then I'm gonna let Steven talk a little bit more about how this is like literally trading 101, okay? Trading 101, I'm sure Steven teaches his students this and does this with his clients. You wanna let your winners run, and that is the exact philosophy behind this new feature of a trailing equity, so that what if the market was willing to give us in a particular week more than say 2 or 3%, but because we were using we didn't have a choice previously, right? All we had previously was a fixed weekly goal. And so when that goal is hit, it takes us out of the market. We're done trading for the week. And sometimes that happens on what? Mondays, Tuesdays. Well, what if the market would have continued moving in a way that the software could continue to generate profitable trades. And so this new feature gives us the ability to have a strategy that kind of accommodates this trading best practices idea of let your winners run. You want to talk about that a little bit, Steve?
Yeah, just as a side note here before I get into that, this sort of coincides with about 6 or 7 questions I've seen stream through. When the weekly goal is reached, folks, software turns off. So if the fixed weekly goal is 3%, then the software is going to shut itself down and will not trade. It's programmed, at least settings out of the box, to not trade Thursdays or Fridays, but it will be trading Sunday, Monday, Tuesday, Wednesday, unless you change the settings. So hopefully that answers some questions. The fixed weekly goal, 3%, I think is good. And let me just, if I may, just put this into perspective. Out here in investment land, whether it be in the U.S. or anywhere in the world, if you are a professional investment manager running a hedge fund or a trading shop or a mutual fund manager, whatever the particular role is of this trader investor, if you can get 1% a week, you will have millions of dollars pouring into your fund. And especially if you can keep the drawdowns low, right? Not have big drawdowns during wild periods of time. I'm talking about drawdowns of like 25, 35, 40%. You're going to have tons of money pour into your fund. So as an individual, I often will coach students to think like they are as a professional trader, as if they were, put yourself in sort of that mindset of a professional investment manager, trader running a desk at a hedge fund, whatever you want to do, somebody running a family office fund. And that is 1% a week is fantastic performance in the long term. That is huge money if it's trading a larger account, right? And it can turn into large money. And you may feel more comfortable with casting a wider net of risk essentially around how Einstein and Alexander trade your account, right? Whether it's a demo or live money, and that's fine. And maybe we're being too conservative, but I would, as an advisor that advises clients on, always being diversified and having some downside exposure or hedging in the portfolio, essentially this software can act in that capacity for you if you have a portfolio of, bonds, stocks, funds, what have you, in real estate around the world. This thing can act as a hedge in your portfolio for you. But keep it tight until you learn how it operates. And I know this may seem like a fair amount of work to a lot of people out there, and maybe it is, but I would just say go through it, let yourself understand how it operates, and really give it an eye. And you don't have to go through the trade line by line, but you can take a look at generally what happens. Like, for instance, over the last 4 months, we did not have obviously this trailing equity start percentage feature, or to be able to trail the account as far as, and I cast a really wide net because I just wanted to see what kind of drawdowns the software would have. I mean, it operated exceptionally well. The account came right out of the gate, did it really well for a few months, and then it hit some bumpy parts of the road. And honestly, that was because I had the settings, in a really high. I mean, I had the equity protector set, in my opinion, wrong, but I was really just playing around with it. Heck, it was a demo account, right? So you might want to play around with the settings. We're going to try and do that for you guys to save you the time of having to mess around with that yourself, obviously. Many of us in this organization were with a previous organization, and we've seen this operate. Many people in the room have actually seen this software operate for many months, in some cases up to a year. So, but this trail equity start and what Ryan's showing right now, this is game changer stuff, guys, because the key is it's going to keep those drawdowns low. That is our genuine hope for how this operates.
So let's explain this a little bit, Steve, and again, chime in and clean up what I'm gonna, in my layman's unqualified perspective, right? I'm just a user. I'm a weekend warrior type of a trader for 6.5 years, but I don't have the credentials you have by any stretch. However, let's talk about this idea of trail. And by the way, I'm going to end up doing this a couple times between now and the end of our session today. Guys, remember, we literally have brought on the finest educator in the Forex arena. Her name is Mrs. Adeze Duncan, and her husband, Richard, have developed literally the most game-changing learning platform, and it's part of your Auvoria Prime subscription, right? We have Auvoria University, and right out of the gate, you have access to the Forex basics. And so some of these fundamentals like lot size and just gaining a basic idea of how the Forex markets work, understanding trading times and trading hours and understanding risk management, understanding mindset, the entire foundational aspect that will help you have a more enjoyable experience as a user of your software is a game changer. And please, to the best of my capabilities, I cannot possibly emphasize strongly enough how you're doing yourself a disservice if you just dive in and start using the software and you don't absolutely consume all of that educational content. It is so well done. Adeze is truly a gifted and blessed communicator. She's an incredible instructor, and these will really help you. These lessons that are included in your Auvoria Prime subscription are going to help you really have a better idea of what the software is doing, why it's doing what it's doing. You'll have a basic idea of what you're looking at when you're trying to kind of look into the market and see what the market's doing. And so, guys, don't take this lightly. You all have access to the Forex basics. Make sure you get in there and you're taking full advantage of that. And so, and this idea of trailing stops, okay, or a trailing equity feature, it's designed to do a couple things: mitigate risk and protect your profits. If you guys are taking notes, I would encourage you to write those things down. Stephen, are those two pretty significant ideas in trading? Mitigating risk, you've already talked about, and then protecting profits, right?
Yeah, it's exceptionally important. It's really one of the most important things we can do, since we don't have to go through the and by the way, I got to tell you, God love her, that Forex course that she's put out, I had a chance to take a look at it. I mean, that is involved and way amount of work that I probably don't have time for, but you guys get a chance. There's some fantastic stuff in there. And some of it does a very deep dive in Forex, which is good. But the variable here, and I'm getting a couple questions about this, is that we're not 100% sure. And obviously, in the beginning, we're going to default to a small percentage, but we're not 100% sure how tight this equity percent should be on the account, right? Because it's going to be different for everybody's account. If your account's way up, maybe you don't want the trailing that tight, right, Ryan? The problem is there's so many, it depends on where the settings should be. I'm going to keep mine at 3%, because if I lose the whole week in the account, there's probably a good chance it's going to start carrying into trades over the weekend, like we were talking about, Ryan. So, ideally, I'd rather have everything closed down Wednesday night to avoid the Thursday and Friday volatility, which the developers of the software told me just the stats aren't there. The win rates are real low on Thursday and Friday.
So here's these couple of features explained, and then we're going to get into Q&A. So let's just help everybody understand this. So if you had a fixed weekly goal of, say, 3%, in this new version of the software, let me explain to you guys first why this is an improvement. In the previous version of the software, let's say you had a weekly goal of 3%, and the market got to 2.5% and then reversed direction, and you went to bed. Let's just say, hypothetically, it was Monday night. You were up 2.5%. You went to bed Monday night with a smile on your face because you were getting close to your weekly goal that you had input of 3% at the start of the week. And you wake up in the morning and the last thing you had seen on your screen when you went to bed, 2.5% is what you had gained so far. You wake up in the morning and now you have a 5% drawdown. Okay, the market reversed direction. In the old version of the software, that's what you got. Now you got a whatever percent drawdown, right? Call it a 5% drawdown for giggles. With this new feature, your trailing equity start, if you were up in this example, 2.5% before you went to bed, you would have triggered your trailing equity start. Here's what this means. If you were trailing your equity by 1%, it means that in our hypothetical, as soon as the market reversed directions and went backwards by a full 1%, the software is going to exit you out of all of your open trades, protecting your profit. So instead of waking up to a 5% drawdown, if the market was at a peak 2.5% before you went to bed and it reversed by a full 1% or maybe more, it wouldn't matter, because it would take you out at that if this is where your settings were, it would take you out at that 1%, meaning you just preserved a 1.5% profit for the week instead of now waking up on Tuesday morning to a 5% drawdown. That's why Stephen, I believe, is saying this feature is a game changer. Is that accurate, Stephen?
Yeah. So the question then it begs the question: what do you do when you're like 6-7 weeks in of a 1 or 2% profit? What do you do with your trailing stop then? That's what we really need to sort of, drill down into. We don't have to answer that question today. Obviously, we'll dive into it a little deeper. But where would we set that? What would we set that if the account was up 50% in a month or in a year? Where would you set that? So well, that's kind of the thing I want to answer next at some point.
I still love reverting back to what you have said many times, that if you had something like this at your disposal over your career, where you had a platform that could do something like 1% a week, while obviously no one can guarantee the future, obviously. What have you said to me in the past, that you would have more clients than you could handle?
Yeah, I mean, anybody would. So, we're probably going to sound like broken records on that, because we'll probably talk about that every week, obviously. But I really don't think you can say that too much. So, I mean, think about it. If you open up Forbes magazine or go to the website and you look at all the billionaires out there in the finance space that did not inherit their wealth, that built it from the ground up, mostly guys that run large trading shops and hedge funds, the ones that are at the top of the list, their performance over a long period of time, net of fees, which is usually at 2 and 20%, is like 20%. They've made it to the billionaire status with that type of return annually, which is killer over a long period of time. Guys like Stevie Cohen, over the long period of time. He runs a company called Point 72 Capital now, but he's had over a 20% net of fees return, running the money in different funds he's had over the last 20 years. Paul Tudor Jones in the same category. James Simons, Renaissance Capital. So, I always bring a lot of these guys' names up because, one, they're sort of icons in the space. Two, I have a lot of respect for what they've done because they've built it themselves. And they've done it by building a phenomenal trading shop and or some sort of algo-based quantitative strategy that trades and markets their equities. But they've, put little pieces of different types of things on their trading systems to be successful. And they've gotten about 1%, every other week.
So let's go through one more hypothetical. I saw that in the chat, just so people kind of understand this new group of features, and then we'll get into the Q&A, and we're kind of obviously weaving some of the comments that we're seeing in the chat into our dialogue here, but we will just dive into the Q&A here for the remaining roughly 10, 12 minutes. But let's give you guys another example. So we talked about a less than optimal Tuesday morning. Let's talk about a more positive hypothetical, right? Let's say we have our settings right where we see them here, just to keep this simple and consistent with our kind of previous example. And we go to bed Monday night and we're up so far for the week 2.5%. And the market has continued to move in our favor, and it has not retraced a full 1%. And instead of waking up to the news that the market did reverse direction, what if we wake up and now, instead of being up 2.5%, the market kept moving in our favor, and we wake up and now we're up 4%? Well, if our trailing equity is set at 1, that would mean that the worst case scenario at that point is that we've got a 3% gain in the bag for the week. Because if our current status is up 4, and if the market reverses direction by a full 1% or more, if this was your setting like you're seeing on the screen, it would mean that when it hits that 1% retracement, which would take you from 4 down to 3, that you now are taken out of the market by the software with a 3% gain for the week. That's what this feature is doing for you. Unbelievable, right? Instead of, again, what if the market reverses direction and it keeps going and it keeps going, and now you have this drawdown instead of having bagged a very, very nice gain for the week? What if it keeps going, right? What if it were to go, who knows, 5%, 6%, 7%? That trailing equity feature is going to continue to follow your increase in equity as high as it can go until it either reverses by a full 1%, or we hit, based on my settings here, we hit Friday at hour 14, which I'm in the central time zone. That would be 2 p.m. for me. The markets close at 4 p.m. my time. And so, if we have not retraced by whatever your input is here by Friday, this is what the closeout feature does for you. Like Steven just mentioned, the last thing we ever want to do is carry profitable trades, open trades, into the weekend. Because what about when the market opens on Sunday, as it frequently does, and it gaps against us? Well, that can erode some of that really, handsome profit that we had. And so that's what this last couple of entries, these inputs, are doing for you, giving you the ability to basically keep riding those winners all the way to the end of the week, but then making sure that you bag or capture, close out all of your trades that were profitable before the week actually ends. Any last thoughts on that, Stephen, before we get into the Q&A?
Yeah, I mean, in a volatile week, which we've been in for, God, it seems like since the beginning of February, right? In a volatile marketplace, these settings are critically important. So it seems like to me, just looking at some of the questions streaming through, Ryan, you might want to just start at the top and just give a quick hit on starting with a fixed weekly goal. We know that, obviously. Start off with, it looks like some people sort of missed it. Maybe they joined us late. The trailing equity start percentage and the trail equity buy. Could you just define those again for the last few questions I saw? Yeah,
for sure. So if you have a fixed weekly goal, your software is going to keep marching until it hits your weekly goal and you're done. Okay?
It'll turn itself off.
Once it hits the weekly goal, correct. And whatever day that happens to be, if it hits your weekly goal, it takes you out of the market. You're done. Weekly goal reached, just like you see on the right, bottom right of my screen here, right? Weekly goal reached, you're done at whatever day that is. And so you're getting out of the market maybe early, but you've gotten your goal for the week, and that's that. Okay. If we instead choose a trailing equity strategy instead for our profit management type, now instead of being taken out of the market, what happens is once we reach whatever number you input here, 2%, it's going to trigger this 1%. Think of it like a guy on a tightrope. Now he gets a safety net underneath of him, right? And we keep moving the tightrope higher, and the safety net follows him higher. But you have to get to the trailing start before it kicks in that safety net. And so if and when the market were to reach whatever you input here for your trailing equity start, at that point, it will kick in your trailing equity. If you, for example, had this at 2% and the market only reached a 1.5% gain and then reversed direction, this is probably the most important thing that I personally could say today. These new features have not been activated yet based on the input you're looking at on my screen. If there was a 1.5% gain and it didn't get all the way to the full 2%, and now the market reverses direction, we didn't get the conditions met that were needed to activate this set of features, in which case now you're going into drawdown. And so we don't want to be dismissive of paying close attention to our accounts just because we have these new amazing features. It's still really important to understand, what's happening with your account, where your settings are at, and be paying attention. I mean, this is your money, folks. And so as important as your money is to you, that'll dictate how important keeping an eye on your software is to you, right?
Yep. Couldn't have said that better myself.
All right. So let's get over to the Q&A. We're coming up on our first hour. Let me scroll through here. And I appreciate you, Stephen, for keeping an eye on the chat as well. Let's see. Okay. Is this being recorded? Yes, it is. Go ahead, Stephen.
Yeah, by the way, Chris brings up a good point. It says a trailing equity lets you take advantage of really good weeks, so you don't have to cap your gains and get out of the markets by Monday evening when you hit your weekly goal. So if you use the software for a long time, you'll have some bigger drawdowns, but this feature will help you set off or essentially offset those drawdowns and still be in a nice profit, essentially cutting your losses and letting the profits run. So well said.
I love that. Okay, let's see. In your opinion, does the software perform better in a ranging, non-volatile environment, or is it able to withstand the kind of volatility that we're seeing lately?
So, I can answer this in the next, for an hour I could talk on this subject, but really the key is, and sorry, I heard part of what you said, Ryan, because I was trying to answer those other questions. For now, folks, I would leave the software off on Thursdays and Fridays. Just me saying, okay? So because the stats just aren't there in terms of win rate or effectiveness of this software to trade on Thursdays and Fridays. And that's not just this software. That's the vast majority of Forex. For anything automated, just win rates aren't there. It's just wilder swings getting positioned for a weekend of events, right? Or some sort of thing going down. When Brexit was the big deal, obviously globally, much of the ramblings going on in Parliament and in the British politics was taking place on Thursdays and Fridays. So it's making the anything related to the euro or the British pound go wild, right? So again, stay out of it Thursday and Friday. I don't trade discretionarily or automated on Thursdays and Fridays, period.
So here's a question that, again, might need an entire hour session in and of itself. But it was asked, so we'll put it out there. And again, guys, understand, not to sound like a broken record, but the more you will immerse yourself in the Auvoria University and the content that is coming from Adeze Duncan, the better equipped you're going to be to understand even some of the answers that Stephen might give you to these questions, because he can answer the questions, but without the proper foundation of what you need in terms of the education, the answers may or may not be helpful to you, right? And so again, I know, like Stephen said, a lot of these might feel like broken records sometimes, but guys, knowledge, when you get the right knowledge and then you can implement that knowledge, that's actually power. Knowledge by itself is not power, but applied knowledge is power. And so we want to make sure that you understand that having insights from Stephen, having amazing expert advisor software, the exponential multiplier for you of the upside is your education, is how much you're willing to invest in learning. And then that'll be your own personal exponential multiplier of how much value you get out of these tools, right? These are just tools, but you still got to know how to use them. So that being said, here's another question for you, Steve. This expert advisor is martingale and grid-based, so it chooses a direction. How can we determine which pairs are ranging rather than trending to best use either the Alexander or Einstein software?
Honestly, if we're going to try and really answer that question, Ryan, it's going to take another 10 minutes easily.
Yeah.
So we're getting into technical analysis, and I've tried hard, and this is probably the thing I get criticized the most of, guys. I just want to dive into the weeds of technical analysis, right? And I don't want us to fly over everybody's head because we're trying to stay real macro today. And I can certainly dive into the weeds because I'm getting a lot of these questions. This type of question has been asked a bunch today. And bottom line is, if you have a 10K account, a 1K account, and the account goes up $500 since you've had a 5% week and you're now at $10,500, and the account value drops back down to wherever your percentage was set, let's say it's a 2% trail, it's going to blow you out of all the trades, and you'll be right somewhere in the area of $10,300, if that makes any sense as far as an example. So you can use the $1,000 example and set it at 30 and 50. But I'm getting this question a lot. So it's basically protecting the profit. And by the way, you might want to share your screen again, Ryan. Looks like it stopped sharing. Go back to your MT window you were sharing.
We can do that.
There you go. And by the way, there's a lot of great questions coming, guys. Just keep these questions consistently coming at us. And I think that we need to develop some other forum. I almost wish we could all chat about this in Telegram, but not everybody's activated to talk in Telegram. So, because a lot of these questions we're not going to be able to get to just because of time constraints. But keep the questions coming, and we'll take some polls through Zoom. We'll get a better feel for where everybody is. If everybody's doing some sort of discretionary trading, we can get into, maybe if we have time allows, a little more technical analysis. I mean, I love this stuff. I could talk for hours on it, but not everybody's got the time or interest in the depth we could go into. So we want to just limit it to the basics, and that's introducing our trailing protections, if you will, on the software this week.
Yeah, and we will develop a mechanism, right? Like Steven said at the beginning, you guys kind of bear with us. We're gonna really find the right rhythm for this venue and deliver as much value to you guys twice a week with Steven as we can. And so yeah, your feedback is encouraged, but we also ask for some grace and for your patience. And we will tune this in and dial it in to right where the sweet spot is, so you guys are getting the maximum value out of it. And certainly that'll include some kind of mechanism where you guys, whether it be maybe through a form filled submission on the Auvoria back office or something, but we'll work on a mechanism where you guys can start to ask questions throughout the week, and those questions can find their way to Steven, and give us some time. We'll figure out the most effective way to do that. Here's another question for you, Steve. We'll take a couple more before we wrap this up. Obviously, people are getting value because the questions are continuing to pour in, and we still have nearly 500 people on after a full hour. So that just goes to show you that this is the kind of content people really are hungry for, and I love that. And they value your knowledge, Steven. So again, on behalf of everybody, so that I don't forget, thank you for that. We're grateful that you're here with Auvoria Prime, and I've had people texting me actually like crazy while this is going on, telling me how excited they are that you're here and that you're our chief market analyst. And so that's pretty cool. I'll send you some screenshots afterwards. But yeah, my phone's been blowing up during this entire last hour about how fired up people are that you're here. Last couple questions. What do you think of deviating from the standard 3 currency pairs and replace, for example, Euro USD with Euro AUD? Would you say that increases risk momentarily or decreases it about the same?
The problem with the Australian dollar is that it is so tied to what China's doing in terms of purchasing in that country, and they are so dependent, unfortunately, on that. I don't trade it just for that reason, and that may seem whacked out, but I have lots of whacked out reasons why I don't trade certain stuff, and I can't get it. It's just too volatile right now. I mean, gosh sakes, the country's been through hell between the wildfires and China cutting off lots of purchasing of their natural resources, and obviously the pandemic. I mean, I really feel for a lot of the Australian citizens down there because they've had a hell of a bad year, and but I promise folks the sun will be on the horizon for you down under, but I just don't trade the currency for those reasons. There's just too many landmines coming down for what goes on there.
All right, let's see. Edward Jones, that's pretty impressive. Do we have Edward Jones on with us? I love that. That's a great name.
By the way, I transfer lots of money from Edward Jones to TD Ameritrade guys as an advisor, so thank you.
That's a great name, Edward Jones. I love it. Edward Jones wants to know, is the starting lot size the same as basically the initial investment?
Sorry, what was the question? I'm not getting a bunch of texts on my phone here. What was the question again? Sorry.
Is the starting lot size basically also the same as the initial investment?
So the initial investment's whatever you can afford to do. I mean, obviously, hope maybe this goes without saying, but please do not put rent money into a live Forex account, trade it if you need it for food or anything. I mean, we all sort of need to batten down the hatches with this virus going on. I think it's much more important to protect the family and the food and right in your homestead than it is to be taking extra money out and put it in a Forex account if you can't afford it right now. But I would put in, as I mentioned, at a minimum $300-500 if you can afford it. I have seen some comments in here that this can be successful trading a $50 account, albeit I'm not going to recommend that. I would at least recommend a few hundred to start, whoever your Forex broker is. Start off with a 0.01 setting or run a demo side by side or start the demo account, which I recommend to everybody first. Let it run for a month or two, see how it operates, truly pay attention to what it's doing. Again, if you guys got any questions, we'll find a venue to contact me. I know everybody's starting to send me a bunch of emails, but that's what I would start off with and get a feel for it.
All right, let's see. Let's find one last question in here, and then we'll kind of bring this in for a landing. There's a lot of good ones, and so yeah, we absolutely need to develop a mechanism where people can be submitting questions that make their way onto your desk, and so we will do that. Keith wants to know, could you start with $100 and be successful, or what is the minimum that makes sense? Is it $3,000? Would you recommend manual trading until we get to that level? So let me just say this again, guys, you're at liberty to make your own decisions, right? Here's what we know. The creators of the software have always said that you really don't want to try to use this software with less than 1,000. And the default settings are for 3,000 with a 0.01 lot size. Here's what that means. Knowing that with almost every reputable Forex broker out there, the smallest lot size available to a retail trader is a 0.01. And if the default from the creators of the software is to use a 0.01 on a $3,000 account, that should give everybody some pretty darn good hints about how substantially you're increasing risk when you start to go below a $3,000 trading account. I'm just using some deductive reasoning, Steve. I don't know if you have something more definitive than that to share with everybody, but that's just kind of my take on that.
Yeah, I mean, we're kind of beating a dead horse here, but I mean, honestly, I would just start with, at least $100. I mean, I don't know. I would want to start with a several hundred, but that's just me. But, do the demo account first. Yeah, and by the way, with a lot of these questions that are coming in, again, apologize, we're not going to get to a lot of them, guys. We'll definitely get to them all down the road. But as a couple people have pointed out, thank you. Obviously there's some Forex trading education. There's a ton of it out there on the internet as well. You can always just Google, Forex basics and just understand how, global monetary policy from central banks affects monetary flow and it affects currencies, right? Understand how news stories affect currency movements. Just have just a basic, broad, macro level. I do not recommend, if you are not good at trading, I do not recommend any kind of discretionary trading to build up that $3,000, as one of the questions said. I would just save up the money.
I like that. Yep, I like that. A penny saved is a penny earned, right? I mean, would you say well, anyway, like you said, we won't keep belaboring the point. Let's go. Last one. And again, guys, so this next question we'll hit is another perfect example of why you want to take full advantage of the Forex Basics course that's already available to you in the Auvoria University. Adeze will teach probably literally, I'm guessing close to half the questions that have come in today. The answers are already waiting for you in the Forex Basics course, and you have a great educator in Adeze to deliver that knowledge to you. But Chris is asking, what is the definition of drawdown? You want to take that, Steve? And that'll be our last question.
Yeah, drawdown just very simply is the account's balance going down. So if you put $1,000 in your account and had a whole bunch of great trades over 2 or 3 weeks, and it's now at $1,500, essentially it's up 50%, just as an example. And then the account drops back down to $1,300. That's called a drawdown. Or you start an account with an even $1,000, again, hypothetical. Account draws down to $700. It's a 30% drawdown.
Perfect. All right. Awesome. Well, I appreciate that. So, guys, we went about 11 minutes, 12 minutes over the top of the hour. I love the fact that so many of you are hungry and thirsty for this knowledge and to get the insights from Stephen. Again, we will absolutely start to dial in this venue and make it as efficient as possible, deliver the maximum value we can to you guys. Stay tuned because Stephen will actually be coming to us twice a week, not only once a week. So make sure that you're following the communication channels for Auvoria Prime so that you can be kept in the loop when this type of content is available to you guys. In the meantime, again, get into your Auvoria University, start digging into your Forex Basics, reach out to your kind of line of sponsorship, right? Whoever introduced you to Auvoria Prime, whether you're a customer or you're an affiliate, that's also a great way to start to track down answers to your questions. There are many, many, many leaders that every single one of you are connected to that can help you find the answers to your questions. This is not their first rodeo. They've been in this space for a long time. And while they may not necessarily have the career that Stephen Vetterl has had, and they may not have the licensing that Stephen Vetterl has, they can at least point you in the right direction of where you might find some of the information that you're looking for. And so with that, we're grateful for all of you for taking some of your valuable time to tune in today. Stephen, thank you so much for all of the value that you delivered today. Everybody stay tuned for the next session coming your way soon.
Great. Thank you. And by the way, Ryan, is there any way we can download this chat off of Zoom before we close this recording down?
It automatically captures it. And so, yeah, okay. I believe that Omar can get us access to it because I do believe it's set up to actually capture the chat in a saved file. So, yeah, we'll figure out through Omar how to get that to you.
Yeah, that would be great. Thank you. All right, everybody, have a great week. Stay safe and profit till we make lots of money, right? See
you. There you go. Amen to that. Bye-bye, everybody.